Michael, we haven't seen that volatility spread, but if we look at a scenario that Megan's outlining, do we have to start thinking about it, or is this really a one-off?
I'm pretty much on Megan's page. I would just you look at the volatility of 10-year forward break-evens. They've gone up a little bit, but they're still in the bottom 20th percentile of all readings going back as far as that metric exists there, right? We've seen much more volatility in inflation break-evens, and for that matter, Treasury futures and bond futures over the last several years there. So again, I think this volatility story keeps getting back to some of the specifics of the VIX in the short volatility industry, if you will. I think we clearly have to be careful about where our break-even is going to explode higher, and that's going to be destabilizing to equities on an enduring basis for sure. I just want to add one comment to what Megan said, which is that I've been really focused on this correlation of China PPI with U.S. Market-based inflation expectations. Correlation soared after the summer 2016. That correlation doesn't have to stay super hot forever, but the China PPI numbers, last three prints have been coming down a lot there as well. And I think that's something to take in consideration before we get too excited about inflation exploding here.
Fair point. The other thing that we wind up looking at is earnings. And earnings holding up means the fundamentals are well. That's supporting equity prices. Megan, you were looking at a chart that talks about equities versus earnings. If you look at the 12-month change level, if we can bring that chart up, you can see in that respect, we actually wind up seeing earnings rolling over a little bit, coming off the highs that we've seen recently, while equities grind higher. So do you see a negative disconnect there?
Yeah, so that relationship seems to be breaking down, as does the relationship between equities and the amount of central bank liquidity that's been pumped into the system. And that suggests that a lot of this might be sentiment driven. And that can turn on a dime. So we've had a load of confidence. All the soft data has looked fantastic in the U.S., but the hard data is not really keeping up with that.